Don't fight momentum. In this video, we're going to talk through market momentum. I'm going to teach you how understanding momentum will help you to be on the right side of the market, avoid getting stopped out on trades that you can easily miss out on so that you don't have to take the loss, how to catch fast and strong wins in line with the market trend, and ultimately how you can win more in your trading with this understanding of momentum. So with that said, let's get into it. So what is momentum? Well, momentum refers to the speed and size of individual candles and also the broader market as a whole. So if we take a look at this candle, first of all, we can see this is a very strong candle. It opened here, it closed up here. We do have a reasonably sized wick on the downside, but this shows rejected downside price action. We have a small wick at the top, which shows not a lot of selling resistance or not a lot of rejections from sellers. So with a large candle body, a small wick at the top, and a larger wick at the bottom, this candle is showing strong buying momentum. Now, if we think about how the market works, it is a constant battle between buyers and sellers. In a phase like this, where the market is moving down, this means that selling is stronger and more aggressive than buying. And when we have an upward phase of price action like this, where the market is consistently moving up with these strong bullish candles, this is a market where buying is more aggressive than selling. So when we're looking at individual candles to read momentum, we're trying to see in this individual candle, who is in control right now? Is it the buyers or is it the sellers? A candle like this shows clear control from buyers. We have a large movement up, creating a large candle body. We have a reasonably large downward wick showing rejection from buyers as they push the market back up against the sellers. And we have a small wick at the top, which shows there wasn't much rejection there from sellers at all. So this would be a high momentum candle. Now, if we look at another candle, let's take a look at this one here. This indecision candle with the wick there and the small body. That is a low momentum candle. If we consider what this candle actually presents to us, basically we have an open and a close price right next to each other. So that tells us that no movement was created within this hour of price action, okay? We attempted to go higher, attempted to go lower, ended up canceling out the buy side and the sell side momentum, and in the end, we just closed where we opened. So this candle tells us in the battle between buyers and sellers, no one is in control because at this point we failed to go lower, failed to go higher, and ended up just closing where we opened. So that would be a low momentum candle. In fact, as would the other candles nearby, where we just have wicks and tiny candle bodies indicating a very large lack of power from buyers or sellers, okay? So this is a low momentum trading area. And then this, with these large candle bodies and no interruption from sellers, would be a high momentum phase. Now, as I said, candles can be viewed individually from the concept of momentum, but we can also look at the bigger picture. So individual candles with large candle bodies and small wicks show strong momentum in that given time frame, right? So this candle here that we're looking at indicates strong buying momentum. So does this candle here, strong buying momentum. It's a large candle body with little to no wicks. All of these candles on the movement up, in fact, are rather high momentum candles. But we can actually zoom out and view the market in phases from a perspective of momentum as well. And we can do this by looking at how much ground has been covered by buyers or sellers in a given time frame. So if we take a look at this bullish move, from the low to the high was a reasonably small amount of time, right? This is a strong bullish movement. We don't see much selling pressure coming in. It's pretty much a relatively linear push to the upside. Now, if we look at the pullback move from the high to the low, so our high is going to be here. Realistically, we didn't kick off until about here for the next move. We can see that the pullback down, or the reversal, or the retracement, took a very long time. So whereas this market pushed up very quickly, the pullback and the consolidation before we made the next upward move with high momentum took a lot longer. Now, what does this tell us from the perspective of momentum and that battle between buyers and sellers? Well, if we look at the first phase where we had a strong upward move, strong candles, little resistance from sellers, this tells us buyers are in control. So we have buyer control at this price range here. If we then take a look at the selling move, the movement back down, we have very slow movement in order to come to a low. We actually also see after each of the selling moves we get, we have a pullback up. So we have a lot of resistance here from buyers. Sellers are trying to go lower, buyers are pushing the market back up. Now, ultimately during this phase, we are seeing control from the sellers because the market's consistently moving lower. However, the fact that we are seeing these constant pushes back against what the sellers are trying to do tells us that, of course, sellers are seeing resistance from buying here. So although we have seller control, it is indeed weak seller control. Okay, so this phase is a phase of weak selling control. If we take a look at what comes after that, this movement here, we see once again, we have a very strong movement that happened relatively quickly, a lot quicker than the selling move. And this happened with, once again, very little resistance from sellers. So whereas we have very strong move up and then a kind of slow, choppy movement back down, when we move into this new bullish phase, we have once again a very strong move up. And throughout this move, we have almost no resistance from the sellers. There is a very small pullback here, and there is a very small pullback here, but predominantly we have clear bullish control, right? We're seeing consistent linear upward movement. How do we use this to our advantage then? We have strong buyer control initially, we have weak seller control, and then we have strong buyer control again. Well, the idea here would be, if we were to see massive strength from buyers, and then we saw weak control from the sellers, we could understand here that this, as a whole, this entire market, is probably under buyer control. We see the buying through the buy phases is stronger than the selling through the sell phases. And we see that even during the sell phases, we're seeing these pushes of strong buying momentum, which is going against what the sellers are trying to achieve. So if we can see clear control from buyers and clear weakness from the sellers, this tells us the next likely movement is probably going to be more control from buyers. So in this instance, we would look to take buys against the downward movements in the market here to continue the next phase of buyer control. So that is one way that we use momentum. It is, of course, to work out, based on the market ranges, which way the market's likely to go by reading the control of the sellers versus the control of the buyers. And the easy ways to do this is number one, we want to see how linear price movements are. This is a very linear move. This is not. Number two, we want to see the amount of time that a movement took. So this push up was considerably faster than this pullback and consolidation back down. And number three, we can of course look at the strength of the individual candles. Here in this upward move, we have these very strong uninterrupted buying candles, as you can see. We have very little resistance from sellers there, and the candle bodies are strong and fast. The movement back down, we have a lot smaller candles on the sell side here. We have more indecision candles, these little doji type candles mixed within. And we are seeing some, once again, pretty strong resilience from buyers with still strong buying candles uninterrupted, even inside of a selling move. If we take a look at this move again, what do we see? Very strong individual uninterrupted bullish candles. So that is the third way that we see momentum. So let's take a look at an example here where momentum can be used to determine who's in control of a market. In this market, we have predominantly downward price action. But we can see even during the downward moves, these candles have large wicks and there is no real significant strong candles. We have a couple of small bearish candles, which have little to no wicks, so these do indicate some weakness. But we are seeing these mixed in with, obviously, bullish candles and candles with large wicks. So this is showing buying resistance. Even as sellers try to push the market down, buyers are stepping in consistently and creating drives back up. Outside of just the individual bearish moves where we're still seeing bullish resistance coming in, we have, of course, pullback moves. And these pullback moves show some notable strength from buyers. Now, of course, at the moment, this is nothing we would want to buy into. We are seeing lots of indecision, lots of wicks, and the bullish candles are small. But the fact that the market is able to even push against the selling pressure with these reasonably long-lasting bullish movements back up shows us that, of course, there are some buyers here with some notable strength to consider. If we then take a look at this range, we can see that the market downtrend that we've seen at this point has basically completely flatlined. If we averaged it out, we are just consolidating at this point, meaning we're failing to go any lower. So that phase right there shows us basically a point in time where buying and selling momentum is the same, okay? So buyers and sellers have the same strength at this point. This means we are in a phase of what we can call indecision. The market hasn't decided which way it's going to go yet. This could go up or it could go down. We need to just wait and see what the market momentum tells us to do. Now, if we were to look at the following candles, so take a look at these, what does this tell us? Well, we can consider a few things. First of all, we're going to look at the first thing we covered, the strength and size of the candles. We can see these candles have very little to no upper wicks, which tells us that buyers are not seeing much selling resistance. We see they have rather large candle bodies. If we compare these candles to any of the candles in this previous range, we see these are considerably stronger. So this is a point where we're starting to see buyers coming into control of this market. If we then look at the broader picture, as we also discussed, we can see that the selling moves are met with reasonable buying moves as well. And we see the candles in the selling movements are a lot more indecisive than the candles here. So those two things combined, also pairing this factor, which is how long did it take for the market to go from its high to its low and to the end of the consolidation, versus how long did it take for the market, once the momentum picked up, to make its bullish movement. Well, we can see that this movement up has actually created a larger move than all of the previous selling momentum did. All of the selling pressure that we saw took a very long time just to get from here to here. The buying move has actually created a movement larger than the trading range and pushed us outside of the top of this bearish range in just 5 candles time, which obviously indicates the buying pressure in here is a lot stronger than the selling pressure in here. So by understanding this momentum, what can we do? Well, there's 2 ways that we can use this to our advantage. If we were thinking of selling this market in any capacity, we may now decide we probably don't want to do that because, of course, the market buyers are considerably stronger than the market sellers. The other way that we can use this to our advantage, and more contextual in this example, would be we could look for buying opportunities because we understand the buying in this market is more aggressive and a lot stronger than the selling. The standard way I will get into trades is to look for supply and demand zones. A demand zone is a consolidation before a large upward move. I use the last candle before the impulse, which for me, the impulsive move is this one here. So the last candle for that impulse would be this area here. The idea here is this has been seen, evidently, as we know from this bullish movement, as a good level for institutional buying. We know that because institutional buying is what really creates the strong movements in a market. Now, if we know institutional participants were happy to buy in at this price range, we can then understand they are likely going to be happy to buy here again, seeing it as a discounted price if the market returns to that level. So having seen very weak selling pressure versus very strong buying pressure, and obviously aligning this with concepts like market structure and the fact that we've actually created a break in structure pushing us into new highs, I would see this as a good level to buy from. Now you could buy in at this level and then you could look to take the market higher, because now you understand you're trading on the right side of the market. Selling in this instance is not going to be good. We see selling pressure is not very strong, but buying alongside this is generally going to be a good idea and a good opportunity, because we're seeing the buying control in this market is a lot stronger than the seller control. As you can see, everything we've covered so far indicates buying pressure and indicates that the likely movement in the future is going to be buying moves. And why is that? Number one, because we have slow moving downward price action versus strong upward moving price action. Number two, the candles are clearly a lot stronger on this buy side move, all of these candles here, than they were on this sell side move. And number three, of course, we managed to break out of a range due to how strong this buying momentum was versus the slow grinding downward move that didn't really achieve any new ground. All right, now let's do a little bit of a quiz. What would you expect this market to do based on the momentum? Well, we can see in this market, we have strong downward movements. We can see the market is consistently pushing into new lows with the momentum that we're seeing on the downside. And we can also see that whereas the selling movements are reasonably strong and fast, okay, the buying moves back up are not as strong, specifically when we take a look at the most near-term momentum. We have this buying move from here to here, which took a reasonable amount of time, versus the selling move from that high down to this low, which happened very quickly. And again, on the buy side here, we've moved into a consolidation Buyers have evidently kicked into this market, trying to move it higher, but it's taken a while. We're still seeing resistance from sellers. So what would we expect to see in a market like this based on the momentum? Well, for me, it would be most likely looking for continued selling moves because we have clear strength from sellers versus weakness from buyers in this instance. So we could look for the market to return to areas of supply. We're going to look at this one here and then look for selling opportunities from there. The other one could, of course, be just above if, of course, we didn't see reactions from this level. And as you can see, when we run the market forward, we get a push up into that area. And then we see new lows created in this selling move. Now, this selling move down, it's not the strongest. We don't have very fast momentum realistically, but we are still seeing uninterrupted selling at least. We're not seeing buying kicking in with too much pressure against the selling move here. And because we'd already be in the position following what the momentum has told us up to this point, we'd be happy to hold through that anyway. And as you can see, that bearish momentum does eventually take control of this market and keep running lower. I also said momentum can be used to avoid easy losses. So losses that are obvious when you understand momentum can easily be avoided, but only, of course, if you understand the momentum. Now, if we take a look at this movement, we can see at the moment clear selling control, okay? We've just made a push into new lows, and when we take a look at how the market's moving here, this selling move was reasonably strong and fast. When we compare it to the same amount of time, we only had a very small movement up with lots of choppy wicks on the buy side. So we see the buying pressure here is not as strong as the selling pressure, which would lead us to believe in this example, selling is most likely what we're going to do. We may be at the top of a market here, starting to see a reversal. We may have an idea to sell from the area of supply, being the last candle before the impulse at the top of this move, right? We may see, okay, this market is now bearish. Sellers look to be in control. So we could look for a sell to take this market down. However, if we then allow the market to run its next candle, we will see here, just with this one individual candle alone, massive buying pressure. So if we ignore this next candle for a moment, we can see that this one buying candle is massively strong. We have very little resistance either side. And also it has managed to engulf, or basically cover, if we take a look from the low to the high, a very large amount of previous candles. We've actually closed with 1 hour of buying over 1, 2, 3, 4, 5, 6, 7 previous hours of selling. So we've reversed 7 hours of price action in one. And we've actually showed significant buying control here, which tells us somewhere around this level, mass amounts of buying stepped into this market. Buying got a lot more aggressive and selling on the downside got a lot weaker. So our initial idea to sell from this supply, we could cancel that. Okay, if we saw a movement with such significant strength coming into a point where we wanted to sell, but it was moving against our buyers, obviously in this instance showing massive buyer control, we would simply cancel our order. And this has saved me from a lot of trades, and it will save you from a lot of trades as well. Now, as you can see, by canceling your order at the end of that hour, you would have avoided this stop loss, because generally the way to sell this, or the way to trade into this, would be you'd be selling there, your stop would be above the high, and your target would go lower. But if we saw this mass buying pressure, we could get rid of that order, close it around the break-even mark, and then this candle that wicked through wouldn't stop you out, because you'd have escaped the trade by just reading the momentum. At the end of the day, markets go up because buying is in control. Markets go down because selling is in control. This here shows us buying is in control because it's taken over 7 previous hours of bearish price action and closed with basically no resistance from the sellers. If we know buying is in control, we just cancel our sell and wait for future opportunity. And another interesting thing here is, if we run this market forward a bit more, you're going to see that we actually lose that seller control. So whereas this phase of selling was reasonably fast and strong and uninterrupted, and the buying pressure was very weak, if we take a look at the new phase of selling, we see a completely different story. So taking a look at this area here, we are consistently seeing wicks and the downside. What does this show? This shows bullish rejections. This means sellers have tried to push the market lower there. They failed. Buyers pushed it back up. Same there, and same there. And we're also seeing that the selling candles we actually have in this price range are very small. They're not really achieving much ground. The buying candles, in fact, are actually bigger than the selling ones, okay? As you can see, this candle body is bigger than this candle body, this candle body, this candle body, this candle body, and even this candle body. We actually are at a point now where we could see the buyer control that stepped in at this level and pushed us up to here has actually taken control of the market, and the selling move back down is weak, which could lead us to believe the next likely movement is going to be a new high formed. If we allow this market to play forward, you will see that we do indeed see buyer control kick into this market and take this market up into new highs. And we get all of this by simply reading the momentum, the strength, the speed of the candles, and the larger picture as a whole, okay? And that is how you would avoid losses and potentially, of course, with your initial selling idea, turn this into a new buying idea simply by reading the momentum, speed, strength, and size of candles and candle ranges. Now, momentum is not a concept to be used in isolation. It is best paired with other concepts inside of a trading system. Now, I've got a free course. There's a link in the description to this.